All right, guys, what's up? Alec back with another stock market investing video. And today you'll actually see that we're almost at $14,000 total. We're up 2.28% today, up $300. So we've had a pretty good day so far. I would scroll down and show you some of my options contracts if you guys have seen those on my Instagram close friends story. I also posted on my normal story as well, so we won't really get into the options side of things. Let me know if you guys do want to see some more options, and I'll post a full video on option calls, like the 3 best options or puts to do right now. But today, this video is going to be about big tech, and it's going to be about the best big tech. This video today is going to be about the FANG stocks: Facebook, Apple, Amazon, Netflix, and Google. Now, in the next video, we're going to be talking about Sony versus Microsoft versus Nintendo. So make sure you do follow along for that video. Don't think I just didn't include these into the big tech. Actually pair the competitors against each other, Microsoft, Sony, and Nintendo against each other, and then talk more about the FANG stocks today. So first up on the list is going to be Facebook. So you guys should already know how I do feel about Facebook. It is one of my largest positions actually in a single stock. It says profile diversity 17 to 18%, but in actuality it's a lot smaller because I have a lot more than just my Robinhood profile, and I keep all my Facebook stock on my Robinhood. So I also have my Webull, my Fidelity, so it's probably closer to like 8%. And you'll see we're up 38%, almost $1,000 on Facebook. You'll also see my average cost is at about $200 a share, and this is one that I would like to be buying more at, right at around $250 a share. That's where I would like to be buying more at. Now, there has been going a lot on with Facebook in the news. As you can see, just today, they did acquire a CRM startup, and that's customers. So I would read in a little bit more about that if you're thinking about getting into Facebook and how that could benefit Facebook in the long term. I think Facebook's a great long-term play. Don't be looking for like some quick gains on Facebook or a swing trade or anything like that. This is going to be like a 2-year play, 3-year play, even 5 years. I'm probably going to be holding Facebook as one of my longest positions. Now, you guys know I like to read news articles too, so this one could be interesting here. Facebook stock rises on Libra, cryptocurrency buzz. I'd probably read some of that one. And also this one, growing free cash flow could boost Facebook stock to $370. So those are going to be some good ones. And let's go into the financials because the cash flow is a big thing. How much cash do they have? What does their balance sheet look like? And I can tell you right now, some of these FANG stocks are going to have some of the best income statements and balance sheets that you guys have seen. All right, so we have Facebook pulled up. As you can see, they've been beating earnings consistently right here. If we scroll down and you actually can look at their total revenue, let me pull it up 1 second. What you'll see in total revenue is they've been growing by double digits consistently every single year. So 2015, they grew by 43% revenue. 2016, they grew by 54% revenue. 2017, they grew by 47%. 2018, they grew by 37%. And then 2019, they grew by 26%. So this is a great growth company. Facebook is they're growing revenues consistently, double digits every single year. They're at $70 billion in revenue. And if you look at their balance sheet, they're also a value company. So Facebook is a value and a growth company at the same time. If you look at their balance sheet, look at their assets compared to liabilities. They have 4 times as much assets than they do liabilities. So that is amazing. Whenever you can see a company with 3 to 4 times assets than liabilities, you know you're in a safe spot. And if anything rough comes up and they hit a bump in the road, you know they have the cash to pay off their debts and they won't go down like a sinking ship. So the next one we have to talk about today is going to be Apple. And it's going to be one of your guys' favorite stocks. I think everyone owns a little bit of Apple. They're up about almost 2.5% today. In the week, they're almost up 5%. In the month, they're up 7%. But they're down 6% in the past 3 months. So what we can see here is a popular support right at around $110, $108. That's where I would probably be buying more if I was going to be buying more. You can kind of see my average cost is $109. We're up 9% overall. I only have $500 in them, so it's not too much of a serious position. And look at that market cap. We have a $2 trillion market cap. and a PE ratio of $35, which actually isn't the worst thing in the world either. Now, with Christmas shopping and everything going on, I would like to own a little bit more of Apple, but I'm not willing to be buying it at 119, 118. I'm going to be waiting till at least hits $108 to $110 to buy into Apple. Now, if we pull up Apple here, you'll see that they are beating earnings a little bit, but they're not beating it as much as Facebook. And what you'll see is total revenue. They haven't been increasing total revenues like Facebook has either. So they're not as much of a growth company as Facebook is. So in 2016, you'll actually see they lost 7% revenue. And then 2017, they gained 6%. 2018, they gained 15%. And then 2019, they went backwards. They lost 2%. And then 2020, they only gained 5%. So they're not even growing revenues by double digits every single year. Their net income is really not that attractive either. And their balance sheet isn't as attractive as Facebook. So a lot of people ask me why I like Facebook. So you can kind of see they're way more of a revenue beast. They're way more of a growth company than Apple is. They're even way more of a value company from a value standpoint because their assets are 4 times the amount of their liabilities, where Apple basically has their liabilities and their assets the same. Now, if we go into their net income and maybe look for something good, their total revenue has really not been increasing. Let's look at their cash and cash equivalents in their balance sheet. So if you click on balance sheet, you'll actually see their cash and cash equivalents is down 22% year to date. So that's never a good thing. So overall, I like Facebook better than Apple, but let's pull up the next one, which is Amazon, and see if they can beat out Facebook for the #1 spot in the FANG stocks. All right, so now we have Amazon pulled up. They're sitting at $3,100 right now, 31.71. They're down about 0.8%. And just in the day, they're up 2% in the week. They're up about 0.4% in the month. And they're down 6% in 3 months, up 75% in the year. So we already know the price point on this one where I want to get in at 2,900 to 3,000 flat is our price point on them. We own a little bit. We want to be buying a little bit more. I probably want to double my position size. We're only up 3% on them currently. And their market cap isn't as big as Apple's. It's 1.5 trillion, still a huge one. And their PE ratio is 93. So it's almost 3 times of Apple's, which means it doesn't mean for sure, but it is an indicator. It's saying perhaps it is a little bit overvalued right now too. Again, I would read some of these articles. Capitalism is the greatest thing humanity's ever done, says the multimillionaire running Whole Foods. Amazon option trader makes 4.7 million bet on 42% upside. And with the whole Cyber Monday thing going on today, it can be a great one. I'm surprised they're actually not up more. They're actually down on the day, even with Cyber Monday taking place too. I do think Amazon's going to be one you're going to want to hold for long term, not like a swing trade or day trade or anything like that. You can see they're consistently beating earnings by a lot. And if we go down to their revenue, you can actually see they've been increasing just like Facebook, 20%, 27%, 30% in 2017. 2018, they increased another 30% in revenue. And in 2019, another 20%. And they're bringing $280 billion in revenue per year. Now, their net income isn't as pretty, but what you'll see is in 2015, they were only netting about $500 million, and then they shot to 2016, 300% on net income, and 2018, they did the same thing, 300%. Now, obviously, they are not doing 300% every single year. Like in 2017 and 2019, they didn't do that, but it's still really good to look at. Now, their balance sheet is not as attractive as Facebook is overall. Again, their assets and liabilities are almost matching up, and it's not even 2 times as much, where Facebook is 4 times the assets to liabilities. Now, if we click into balance sheet and actually look, the good thing is that their cash and cash equivalents is up 28% year over year, and their short-term investments is up 90% year over year, which is always a good thing to look at. So right now, I would say Facebook still is in first place because their revenue growth year over year is basically the same as Amazon, yet their balance sheet is 3 to 4 times better than Amazon as well. So you can kind of see Facebook is a sleeper. A lot of people don't realize how good of a company Facebook really is. They are up there with the Amazons, the Apples, the Googles. Facebook is definitely a powerhouse, and you want to be getting in right at that price point I was talking about too. Now, don't get me wrong, every single one of these stocks on the list today is going to be an A+ stock. There's actually some of the best stocks in the entire stock market out of thousands and thousands of stocks. They're some of the biggest companies in the world. The next one we have to talk about is going to be Netflix, sitting at $490 right now. Basically flat, didn't move at all today. Up 2.4% in the week, down 2.2% in the month, and down 5% in the last 3 months. Now, this is one that we can actually be swing trading. You can see the pattern here. It tends to follow the same pattern over and over. So I would be looking to buy in right at around 470, even 490, I think is probably a good buy and a safe buy as well. And then you can dump right around 550, 525. I think that this can be a good swing trade to hold the 520, 525. And I think we can see a 10% growth in the next few months by swing trading Netflix too. PE ratio is 80, so it's a little bit high. It's a little bit overvalued perhaps. And the market cap is one of the smaller ones out of the list, only 200 billion. Now, I would definitely read some of these articles here to see if there's anything good news, maybe, because whenever you're swing trading or day trading, you definitely want to look at news a little bit more than long term, because there might be a catalyst that will pump it up and you can make that 10% pretty quickly. So Netflix here, it's going to be, they're not beating earnings. So what you'll see is they actually did miss earnings a few times, and they're going to be reporting earnings in about 1 month too. So it'll be exciting to see if they miss or if they actually hit on earnings. Now, if we scroll down and look at their revenue, they are going to be one of those revenue beasts. So they are a good growth company. What you'll see in 2015, they grew 23%, then 30%, 32%, 35%, and then 27% in 2019. So they're growing consistently revenue, double digits every single year, which is one of the top things to look at when getting into a growth company. And other than that, their net income is steadily increasing too, double digits. That's pretty hard to find. You'll actually see that in 2016, they only had a net income of 186 million. And just in a few years, they're all the way up to 1.7 billion, which is a huge, huge increase and something to be very, very proud of. Now, the only thing about their balance sheet, it doesn't look as pretty as the other companies. If we go into their balance sheet, their cash and cash equivalents is up 89% year over year, which is a good point to make, though, when looking at a balance sheet. Now, this one's going to rank third on the list. So number 1 is going to be Facebook still. Number 2 is going to be Amazon, then Apple, then Netflix. So it's actually number 4 behind Apple. All right, and the last one on the list is going to be Google. You can look at GOOGL or you can look at GOOG. It's the same thing, really. The only difference is that you are like a shareholder and you can go into like the conference calls and stuff with one of them. Now, I like to do GOOGL because you have a little bit more power, but that's totally irrelevant. They're up 1% in the day, or they're down 1.8% in the day. They're up 1.5% in the week. They're up 5% in the month, and they're up 6% in the last month, in the last 3 months. So if you remember in previous videos, if you've been following the channel for a while, I was super bullish on buying them at $1,400, $1,500 for a long time. And their PE ratio, even at $1,700, is still only 35 on the PE ratio. So that is an indicator that you are going to be getting a good deal on Google, even at $1,700. Their market cap is 1.1 trillion. And Facebook, this is a good one to read. Facebook, Google to face new antitrust suits in U.S. I would recommend reading the full article and just reading of what that can be about and how it can affect both those companies. But getting into the financials, you'll see in Q3 2020, they did beat earnings by a lot, so that's always a good thing. And then the total revenue, they have been growing total revenue by double digits every single year. So they have 13% gain, 20% gain in 2016, 22% gain in 2017, 23% gain, and then they finish it off with an 18% gain in 2019. Now, their net income is one of the best as well. They'll actually never went negative, and they are growing their net income by double digits every single year, along with total revenue, which is hard to find when you're looking at a company. Now, the last thing we'll talk about is the balance sheet. And look how beautiful their balance sheet looks also, on top of everything else we talked about. They have about 3 to 4 times as much assets than liabilities. And if we go into their balance sheet, their cash and cash equivalents is up 25% year over year. Now, their account receivables is up 19% too, which is always a good thing. So going back to the rankings, I would be putting Google at number 2 because of their strong balance sheet and their strong growth on their revenue. So they're almost like Facebook. Facebook's a little bit more extreme, just by a little bit. I would say Facebook is winning. So for me personally, it's going to be number 1 Facebook, number 2 Google at the current price, and then we're going to see after that Amazon number 3, number 4 is Apple, and then in last place we have Netflix, which is pretty obvious. Now, personally, I would want to be buying Google closer to $1,500, but if you are going to be looking at long term, and I think them going back down to $1,500 to $1,600 is totally realistic and doable. They're one of the biggest companies in the world, so you definitely want to own some of these stocks, if not all of them. And I would definitely recommend buying into the top 3 and owning those top 3 that we talked about: Facebook, Google, and Amazon. Apple is a great one too, but they've already had crazy growth on their stock price. So I think their big growth days are behind them. I mean, they can still get 10 to 20% on their stock price gains per year, but seeing, 100% a year, 200% in, a couple of years like we have been seeing in the past, I doubt we'll see that in the future with their stock price increasing. So guys, that is the video. I hope it did help you guys out. Share it with a friend if it did help you and you do see some value in it. Leave a thumbs up on the video. As long as you guys like these videos, I'm going to keep making them for you. And if you look at my account, we're up, just to give you a little bit of an update in the past month, we're up 8% and we're up 40%, almost $4,000 on just my one account, Robinhood account, in 1 month. I put on my Instagram that I'm also up about $2,500 on that account too. So overall in the stock market in 1 month, I already made like $6,000 to $8,000 in the stock market just in this 1 month here too. And a lot of my students have been seeing success as well. If you want to actually see some of the success my students have had and the people I'm teaching have had as well, go to my profile and then right here you'll see client success. Click on that and it'll load up, and then go through some of these client successes so you can actually see from real people on the results they're having from working with me too. And the results, they speak for themselves. But that's the video, guys. I hope you did enjoy it. Smack a thumbs up on it. Share with a friend. Comment on the video on what your favorite FANG stock is and which one you're buying in at. And until next time, guys, I'll see you in the next video. Don't time the market, buy the market. Peace.